2021 is over, and now we're in 2022, and it doesn't look like anyone waved a magic wand and changed the circumstances. But my name's Donovan from the Elevation Real Estate Group in Remax Treeland. I'm joined again by Tyler Schachter today.
Hey everyone.
We want to just recap what happened in 2021 and make some predictions or lay out some expectations at least for 2022. So let's jump right into it here, Tyler.
Yeah, what a crazy year. I think most of us can agree that we're happy to have that one behind us.
Yeah.
Definitely one for the record books for the busiest year in Fraser Valley history, the 100-year history of the Fraser Valley Real Estate Board. So, extreme by all measures.
Mm-hmm. Absolutely, yeah. I think, to start by just talking about the amount of demand that we saw, I think that was the biggest driver in 2021.
Yeah.
What was one of those main drivers behind that demand?
Well, we don't want to get too political on these discussions, but we can't refute some of the numbers that the money supply in Canada, the amount of money in existence in the past 18 months increased by 23%.
Wow.
So with that much money, more money floating around in the economy, more money chasing the same amount of goods, of course, leads to inflation, which was the number one story in 2021. Increase of price of goods. We saw it for fuel, lumber, food, and then of course housing was the big story of that. So yeah, we've seen huge demand, not even low supply, just the supply numbers. We saw a huge number of listings happen in 2020
absolutely.
as well.
Yeah.
But we could not keep up with the amount of demand that was entering the marketplace. So.
Yeah, and like you said, we had a record-breaking year. This is the busiest market in 100-year history. Mm-hmm. We saw 39% more transactions take place this year than last year, and it shattered the last record by 15.5%, which was back in 2016.
Yeah, that's crazy number of sales transactions taking place in a pandemic year and another pandemic year. So by all measures, demand was huge. Not only were people more money in the economy floating around, but also as people's house values increased, then they looked to reinvest that. Mm-hmm. So we saw, you've got the numbers there on the number increase in sales for houses and townhouse, but kind of the maybe surprise to some people was the amount that condos increased as people started to reinvest the equity that they had gained in their existing real estate.
Yeah, exactly. We saw a 31.8 increase in the number of detached homes that sold, 33.7 for townhomes, and a staggering 68.9% increase for the number of condos that sold. And I think that a big portion of that also comes down to new construction, because we saw a lot of pre-sale condo projects hitting the market this year, Latimer Heights being one of the bigger ones. And those were extremely high in demand, right? Everyone wanted them. There were lineups outside for days for people to go view the show homes and try and get their spot.
So a bit of a reversal of the trend from 2020 where everybody was looking for lower density when we were locked down in our homes, looking for a little bit more yard and a little bit more space. Mm-hmm. That reversed in 2021 as more people were willing to consider condos as an affordable option because houses and houses had escalated into the stratosphere, and the investor contingent, which generally is driven towards the pre-sale market. So we saw a lot of that.
Yeah, absolutely. Let's get into the supply side of things, because we mentioned that it wasn't really an issue of having lower supply than normal. We actually had a lot of supply. We had more new homes being listed, I think, even than last year.
Yeah. How many listings did we see in 2021? I don't know if there's a yearly total or a monthly comparison.
So we received 35,629 new listings, which is the second highest on record, second only to 2008.
Yeah, so you can't say that we had no properties to sell.
No, and we had 12.4% more listings than last year.
Yeah, see.
So that almost trends with the increased number of sales, right? We saw 15.5% higher. That was 2016 numbers. But yeah, so we still had a lot more listings this year than we did the year previous, but just way more sales that outpaced the amount of supply.
So the imbalance in supply and demand still existed and perpetuated. And of course, when we have high demand and low supply relative to that demand, we see increasing prices. With all that extra money floating around, we saw inflation in housing, substantial gains in values for our both average prices, median prices, benchmark prices across all three property types.
Yeah, so we're just going to give you a high-level view on Langley here as an example. But for detached homes, we saw the average price in the month of December reach $1.75 million, which is a 36.6% increase year over year from last year.
Yeah, and that's not a luxury home we're talking about. This
No.
is a newer, typical suburban middle-class home in Langley at 1.7 plus.
Yeah, absolutely. For townhomes, the number was 891,000, which is a 37.6% increase year over year. And I actually saw just in December here a 2-bedroom, 3-bathroom townhome sell for 891, which blew my mind. That those prices are that high. And I also saw a 1,500 square foot 3-bed, 3-bath townhome sell for $999, $1 million. So the market is moving dramatically, or has moved in the last year. Condos, we saw the average price be $564,000, which is a 36.6% increase year over year as well. Right. So substantial gains, all over 30% for each category.
Yeah, it's creating an interesting landscape heading into 2022. The big question, of course, is where do we go from here? And for better or worse, I know it's not what everybody wants to hear, but at least at the moment, it looks like we're going to see more of the same.
Yeah, I think a lot of people had optimistic views of 2022 and it will get better, but the clock hit midnight on the last day of December and everyone woke up January 1st and it was exactly the same. So we entered the year with 1,957 units. This is for the entire Fraser Valley, which is 60% below the 10-year average and the lowest inventory coming into a new year in 41 years.
Yeah, I've been doing this for 17 years now. I've never seen a start of the year look quite like that.
Basically, the year Joel started in real estate was pretty much the last time that inventory was this low.
Well, and think of the population in the Fraser Valley at that time.
Totally.
It was half of what we have today. So this is actually quite a bit lower relatively than we would have seen 40 years ago.
Absolutely. So we have issues. We don't have enough housing right now. We do have, we're talking to a lot of people that are considering putting their houses on the market though. So hopefully we're going to get some more inventory in the next month, 2 months.
Inventory will climb starting now. I mean, it's historic trend. It's always at its lowest point of the year, December 31st, as people come through the holidays and in the winter months. But they meet with family over the holidays, they get their New Year's plans rolling, and they want to get the ball rolling. Our phone starts ringing in early January saying, Tyler, Donavon, Joel, we want to make a move this year. Let's get that discussion going. What can we sell for? What's out there available for us to buy? So we know the inventory is coming. We, of course, are closely monitoring the ratio between the number of buyers entering the marketplace and the number of sellers. And we hope that this stalemate of sellers that have not been able to list because there's been nothing for them to buy starts to diminish, that they just take a chance and we see some options and it knocks some people off the fence into the marketplace. So.
Yeah, absolutely. So looking into 2022 now, we've kind of covered supply and demand heading into the year. What are some other factors that are going to impact this year in real estate or could potentially impact this year?
Yeah, so, we're starting with the imbalanced supply and demand. The other thing that we know with a fair degree of certainty is coming down the pipeline is raising interest rates. The government has not been subtle with their indication that rates are going to go up. The question of when and how much and how many rate hikes we're going to see this year is very much being debated right now.
Yeah.
But it's going to happen. It needs to happen. It's one of the only things that has shown historically that it can pull some of the steam out of an overheated market. So we're obviously watching that fairly closely with a strong recommendation to chat with a mortgage broker and have a rate hold in place if you're looking to make a move, because those rate increases are coming and you want to at least have that window when they hit.
Absolutely, yeah. So a rate hold, for those of you that don't know, just allows you to hold today's interest rate for up to 4 months. So if you're interested in that, feel free to reach out to us. We can connect you with a mortgage broker who'll be able to help you with that. Some other things are new rules or government intervention potentially coming into our market again. We saw this a lot in 2018 with different things coming down, the stress test being the biggest one, which essentially mimicked raising interest rates. And as we saw in 2018, really put the brakes on the market.
For sure. Yeah, there's nothing that's been announced yet, but there's a lot of discussion right now, both in local real estate circles and at government levels. So there was a report commissioned by the CMHC, that's our federal housing lending agency oversight. The report talking about, I guess, weighing the pros and cons of a tax on homes that are valued over $1 million, which of course would have sweeping implications across the country. You know, $1 million home in some parts of the country is fairly substantial. As we just discussed, $1 million home in Langley is a townhouse.
Yeah.
So there's all sorts of questions or curiosity about what the government might do. There's also rumors of discussions about capital gains taxes. Right now you have an exemption on your principal dwelling for capital gains tax, and there's suggestions that they might be looking at ways to remove that exemption, or from maybe it's for people that sell their home within a certain time period. If you sold less than 5 years or 3 years, they might explore the option of taxing those to curb speculation. So none of this has been announced. We're not saying this is happening. We just know that the government and organized real estate is looking at options to slow down the market, in addition to increasing rates. So it is something that we're kind of anticipating either further discussion or implementation as this year rolls out, and we'll be watching closely.
Yeah, exactly. And I think the biggest thing is that we're going to be keeping our eyes locked on it and making sure that we keep you guys updated as well. So if you do have any questions about your specific situation, or how these statistics or how this year's outlook is going to impact you, if you've been considering making a move and you're wondering if this is the time, feel free to reach out to us and we can apply these situations to your specific needs and kind of put together a plan for success.
Absolutely.